Hello and a pretty lovely good evening from here in Delhi, and hope as always that each one of you are absolutely fine, happy, and of course in fine spirits. So today we are going to pick up our rapid fire revision session. You can call it ultra quick revision, and here we are going to pick up all the theoretical topics. Now, as far as your theoretical topics are concerned, the prominent among them are: one is government accounting, where you need to stress a bit hard. Besides that, another one is your CSR, and then XBRL. These are the three topics wherein you need to actually put a bit of what you call extra efforts. And all the other remaining topics, you can expect only MCQs out of those. Is it clear to you now? So we start with government accounting as usual. So as far as government accounting is concerned, as you know better than I, actually government accounting records public revenues, expenditure, assets, liability, and ensures accountability in the what we call use of the funds. What I said actually, that government accounting records your public revenues, expenditures, assets, liability. That means everything which is related to public. That is very important and ensures accountability, how the public funds are going to be used. Now, another important point in this particular regard is accounting basis. Now, you know by now you are well aware that most of the transaction as far as government accounting is concerned are done on cash basis. Suppose in MCQ it is asked, then you should be in a better position to say that government accounting is mostly done on cash basis. However, of late now government is slowly moving towards the accrual system, because now we are actually converting our existing accounting standard related to government into what we call financial reporting standards. So slowly we are modifying that particular approach. In future, definitely even the government accounting will be done on accrual system. But right now, presently, we are actually doing the accounting on the basis of cash. Now, as far as entire government accounting structure is concerned, you can say actually there are three prominent features or institutions. One is GAAP. Sometimes the full form is also our Government Accounting Standard Advisory Board, correct? And as you know, the responsibility of this particular board is to set out the accounting standard. Then beside there is CMAG, as you know, Comptroller and Auditor General, and basically their task is to audit and oversight. And third one is Controller General of Accounts, CGA we call it, and their main point is to maintain the accounts related to the central government, correct? Now, coming over to the next part, government funds. Regarding this, you need to understand that there are three types of funds. One is Consolidated Funds of India, known as CFI. Another one is Contingency Fund, and then we have got Public Fund. As far as consolidated funds are concerned, this happens to be the main fund, number one, and all the revenue, borrowings, and loans actually are flow from here. And this expenditure, whenever we are going to actually make any expenditure out of this particular fund, important point is that Parliament approval is required. And another one is Annual Appropriation Act authorizes the withdrawal. For example, suppose we want to withdraw some amount out of it, again actually it requires what we call authorization. Then contingency fund, name itself is suggesting contingency fund means sometime actually contingencies arise on account of, say, floods or what we call earthquakes or any other natural calamity. So in order to meet such urgent and unforeseen what we call contingency, we have kept a contingency fund. So the main purpose is for urgent and unforeseen expenditure. And obviously, this is at the disposal of the president, and you can say president and governor of the state. Then expenditure later on is recouped from what we call CFI. Recouped means actually, suppose right now in the contingency fund we have 50 lakh rupees. Is it clear to you? And let us say we have used 40 lakh rupees. Now I will have to fill that 40 lakh. How I am going to fill that? I am going to take it from what we call contingency earlier fund. That is what we call Consolidated Fund of India. That's what exactly the point what I am trying to say here. Expenditure later recouped. Recouped means you are going to recoup it from Consolidated Fund of India. That means you are going to fill that amount which you have spent actually out of Consolidated Fund of India. This is the main point. Then public account. Public account means these are the funds held in a trust and not owned by the government. Is it clear to you? These are the funds which are not owned by the government, rather they are actually owned by the trust. For example, it includes public provident fund, small saving deposits, advances, court deposit, and does not require parliament approval for withdrawal. The important point which you need to know regarding this particular topic is that there are three types of fund, and if possible try to actually learn the articles which are associated with these. Then classification of expenditure. As you know, there are basically two types of expenditure, revenue expenditure and capital expenditure. I need not require to talk much about that. In case of revenue expenditure, we are not going to create what we call any asset, and these are of recurring nature. For example, when government pays salaries, subsidies, interest payment, etc. While capital expenditure, definitely it is going to create the infrastructure. For example, when we are going to actually build the roads or the dams, so all these are examples of what we call capital expenditure. Similarly, government receipts, as far as receipts are concerned, government basically derive their receipts through tax, and there are some non-tax sources like fees, fines, and dividend. Even government actually invests, and that is why government also receives the dividend. And capital receipts means sometimes government also takes the what we call borrowing, they recover the loan, and disinvestment means actually suppose government has made some investment and suddenly it decide to sell off that particular project, so we call it actually disinvestments. Is it clear to you? Now, government accounting standard, this is the most vital topic actually. As you know, as far as government accounting standard, as we call it actually GAS, these are issued by the Government Accounting Standard Advisory Board, and you need to be completely well aware of this full form, because so often I have seen actually in the MCQ the questions have been tossed up from this particular topic. Now, as far as Government Accounting Standard Advisory Board is concerned, it is constituted by C&AG of India, Comptroller and Auditor General of India, to improve the transparency, comparability, and quality of the government financial reporting. Whatever I have written here, let me tell you, actually I have scanned all the MCQs, nearly 150 MCQs I have scanned, and according to that, actually we have prepared these rapid fire notes. So often, even this particular question has been asked, correct? So GSB was constituted by C&AG of India, and what exactly is the purpose? To improve the transparency, to comparability and quality of the government financial reporting. Then these standards will apply to union, state and union territories of the government. This is another feature which you need to be aware of. Is it clear to you or not? Coming over to the purpose. What exactly is the purpose? To standardize the government accounting. For example, in normal accountancy, we prepare a standard. The basic purpose is to have what we call uniform approach to the accounting. That is exactly the purpose here also, to standardize the government accounting practices, improves the transparency, to enhance the public accountability, and to move towards the best accounting practices and to support the system which we are slowly moving from cash system to what we call accrual system. In future, definitely government accounting too will be done as per accrual system. Now, types of standard issued. There are two types of standard at this particular moment, as is the case in the what we call normal accounting. As you know, in normal accounting, we have two sets of accounting standards. One is existing set of accounting standard, another one is international, we call it India's, which are compatible to international financial reporting standard. And similar is the case with respect to the government. There are some existing standard, we call them Indian Government Accounting Standard, IGAS, and these are applicable under cash basis, that means under the present accounting. But in future, Indian government financial reporting standard will take place. They are compatible to international accounting standards, and they are basically accrual based. Is it clear to you? Lots of MCQs have been asked on this particular part. Now, key Indian government accounting standard. What I have seen actually, you haven't been asked to write a note on a particular accounting standard or to explain a particular accounting standard. In fact, you have been asked MCQs with respect to the title of the accounting standard. So that is why you need to be quite well aware with respect to the title. For example, IGAS 1. It deals with guarantees given by the government. This is the point which you need to remember from the examination point of view. However, just to actually improve your knowledge, actually it requires, as per this particular standard, actually, as I told you, it refers to the guarantees which have been given by the government. Often government actually stands as the guarantor. So it requires disclosure of guarantees outstanding, invoked, and likely to be invoked. Invoked means which are going to be withdrawn. And guarantee fee recovery. So some disclosures are required. This particular standard says that if government has given some guarantee, it need to actually provide full details regarding the guarantees which it has given regarding the outstanding loans, and such guarantees which are about to actually taken away. Invoked means which are going to taken away. And guarantee fee recovery. When government sometime actually gives the guarantee, it tells the other party you are going to give us some fee, and so government need to put up the details regarding that recovery also. IGS 2, it deals with accounting and classification of grants in aid. This is another important point. Now, grant in aid normally are treated as revenue expenditure. This is the point which you need to understand. Capital classification allowed only when government has given a grant and that grant has resulted in a creation of an asset. Is it clear to you? and ownership remains with the government. That is also an important point. If government has given grant, generally the grant is treated as revenue expenditure, but if government has given grant and it has resulted in the creation of an asset and the ownership is with the government, in that case it can be categorized as a capital expenditure. IGS 3 actually relates to loans and advances by the government. Loans and advances by the government. Whatever loans government has given actually, so it relates to that. So the basic crux of this particular standard is that whatever loans government has given, government need to classify that, their disclosure also needed, and of course, what time period has gone by, that means aging of the loans must be presented. Similarly, you must disclose interest term, overdue amounts, etc. to enhance the clarity and recoverability. Similarly, IGS 4 actually deals with inventory and the fixed asset. The title is very important. IGS 4 relates to inventory and fixed asset. Is it clear to you? Obviously, this particular standard basically has introduced asset registers, their valuation and classification. Is it clear to you or not? So this is the main point that IGS 4 actually relates to inventory and fixed asset, and IGS 5 relates to public debts and other liabilities. So this particular standard requires actually reporting of internal debt, external debt, small saving liability and other obligations. IGS 6 relates with cash flow statement. I need not require to talk much about that. And similarly, IGS 7, in the MCQ, so often this particular question has been asked. IGS 1 and IGS 7, and it relates to government, accounting for government guarantees, and it relates to, now some of you may feel actually, so there was earlier standard with respect to what we call government guarantees, as we talked about. No doubt about that. Correct. For example, we did a standard earlier, actually IGS 1, but here I have written extended. Don't forget about that. So IGS 7 and IGS 1, most of the time these questions have been asked, so you need to actually go through this. Another one is, now there is second set of accounting standard, as I told you, IGFRS. Now IGFRS means actually Indian Government Financial Reporting Standard. Indian Government Financial Reporting Standard, they are compatible to what we call International Accounting Standard, and the main crux is that here we want to actually move from existing system of cash basis to accrual system. This is what you need to actually understand that, and you need to be quite well aware of the title. IGFRS 1 actually relates to presentation of financial statement. IGFRS 2 relates to revenue from non-exchange transaction. IGFRS 3 relates to property, plant and equipment. IGFRS relates to employee benefits. IGFRS 5 relates to provision, contingent liabilities and assets, and IFR 6 actually relates to leases. These are the important points. So major theme of Government Accounting Standard Board of India, as I have already told you, actually to move from cash system to what we call reporting economic reality, that means accrual system. Now benefits you also go through, and here I have included some MCQ. For example, GASAB, just a moment ago I told you it relates to Government Accounting Standard Board. There are various options, but this is going to be the answer. IGAS 2 relates to government. It relates to actually accounting and classification of grant in aid. Similarly, which of the following is not a general principle of accounting? Actually here, single entry system is going to be the answer. A standard developed for accrual system of accounting in the government are called standard developed for accrual system. This is the point I was talking about. Indian Government Financial Reporting Standard is going to be your answer. Which I have written in bold are going to be your answer. Which of the following is a responsibility of the GASP? Now this is the question actually when I was talking about. I told you even from that particular part, the question has been asked. So in this case, all of the above will be your answer. As per the Constitution of India, accounts of governments are kept in consolidated fund, public fund, contingency fund. This I have already told you. So all of the above will be your answer. Similarly, the next question, the financial statement of union government, state government and union territories with the legislature shall disclose the following details concerning the public debt and other what we call obligations. So in fact here I have written three options, and all these three options will be your answer. Is it clear to you? Consolidated Fund of India is the fund. As I told you, you need to be quite well aware of the what we call articles which are associated with these funds. So here Article 266 subsection 1 is going to be the answer. Similarly, the financial statement of Union Government of India shall disclose the following detail under honestly speaking, whenever the question is going to be, whenever the question is going to be present in a long statement form, generally all of the above will be your answer. So even in this particular case, all of the above will be the answer. Which of the following is not a feature of government accounting? Non-fund based accounting. Actually, government accounting is a fund based accounting, and here it is written non-fund based. So it cannot be categorized as a feature. Is it clear to you? So this is what you have to go through the government accounting. Coming over to the CSR, corporate social responsibility. Now, as you know, actually, in India, when suppose I'm going to ask you what exactly we mean by a complete set of financial statements, so most of you would tell me the correct answer. As you know, a statement of P&L you are supposed to prepare. You are supposed to prepare the balance sheet. Besides that, you are supposed to prepare what we call a statement of changes in equity. Isn't it or not? Because now we are following India's. So a statement of P&L, balance sheet, a statement of changes, and besides that, cash flow statement. And of course, we have to append the notes. This is what we mean by a complete set of accounting. That means at present in India, there is no law or no standard or no act prescribes that an entity need to prepare CSR reporting, or an entity need to actually do something else. But problem is that accounting horizon is changing and it is becoming very fast. Nowadays, so many times I keep on telling in my regular classes also that suppose if I am the investor and I want to invest my money, so simply the profit earning capacity of the company is not going to be the yardstick on which I am going to invest my hard-earned money. Are you getting my point or not? Because nowadays the investors have become quite well aware. Actually, they want to know what this particular entity is doing for doing besides earning profit. What this entity is doing for the planet, for the society, for the environment. So there are several other issues which investors take into account nowadays. So that is why there is an indirect force upon the entities. Besides preparing their what we call normal financial statement, they append what we call several reports like corporate social responsibility report, like human resource report, etc. There are several other reports. So if you are going to scan ever the what we call financial statement of the big companies, you are going to find actually besides the normal what we call statements, normal financial statement, there are several other reports which are attached to that. Is it clear to you or not? And why they are doing so, as I've already told you, because the investors are very keen nowadays. Before they want to invest, they want to know what you are doing for the planet, for the environment, for the society. So that's the main problem. Now, what we mean by why actually I talked about all these aspects while discussing CSR. Actually, nowadays, the government of every nation wants, especially the big entities, to keep a part of their profit, correct, for corporate social responsibility. That means for such activities which have been listed under Schedule 7, as we are going to see later on, correct? And all those activities are basically for the betterment of the society. So government want actually every entity to spend a part of their profit so on what we call those activities which help in the betterment of the society. So indirectly, that means the Act, Section 135, as we are going to say later on, actually forces the company actually to spend a part of their profit indirectly to take up some what we call social issues. So this is the point. And as far as this particular chapter is concerned, from this particular part, first of all, you need to know that CSR is mandatory for the companies having net worth of 500 crores or turnover of, see here it is written net worth. Net worth of 500 crores. Net worth means share capital plus reserve in surplus. And turnover of 1,000 crore or profit of 5 crore. So if you are able to satisfy any of the criteria out of these three, then you are supposed to actually adhere to the CSR. Is it clear to you? Then it becomes a mandatory case. Another important point is that a company must spend 2% of the average net profit of the past 3 years. Whatever profits which you have earned in the past 3 years, you will take the average of that. You will take the average of that, and 2% of that must be actually spent. Section 135 of Companies Act, of course, 2013 deals with that. And these are the, before that, Section 135 also says that if the CSR is mandatory upon you, then you need to actually form a CSR committee wherein there must be at least 3 directors or more than that, but must be 3 directors, and one among them should be actually independent. So often a question has been asked from this particular part, even this particular part. Is it clear to you? Now, activities which are listed in Schedule 7, as I told you, there are several activities and you must see actually. That means that Law is telling you that you must spend 2% on CSR activities. Now, what are the CSR activities? To promote education in the society, to organize program, to enhance the vocational skills of the people, to promote healthcare and sanitation, to organize seminars and programs in order to educate the people and the environment and sustainable development, to set up orphanages, old age homes and daycare centers, promote training for the sports. So these are the several what we call activities. So indirectly government is forcing you to actually take up such issues. Obviously, if entities are going to actually spend a part of what we call their profit on such activities, it will help in the betterment of the society and the environment too. No doubt about that. Now, another question is, what about the unspent? For example, 2% of the average profit you are supposed to spend. And let us say this 2% comes to actually 100 crores. And let us say you have spent only 98 crores. So 2 crores is the unspent amount. This unspent amount cannot be carried forward, to be very honestly speaking. Many a time this question has been asked, whether the unspent amount can be carried forward. Your answer should be no, but it should be transferred to unspent account and it should stay over there for 3 years. Then non-ongoing unspent CSR activity means, suppose actually you have unspent amount and you haven't been able to utilize it, then standard says that it must be transferred to a fund as specified in Schedule 7 at least, and it should be over there for the next 6 months. Another important question is, CSR cannot be for political donation, employee benefits and normal business. Is it clear to you? Indirectly, any activity which is not going to help society as a whole cannot be treated what we call as CSR activity. Similarly, CSR report is mandatory in the board of report plus CSR annual return. So what activities you have done, how you have spent, where you have spent. So that reporting must be done and that must be mentioned in the what we call report of the board and also CSR annual return. These are the points which you need to be quite well aware as far as this particular chapter is concerned. So here are the MCQs which we have picked up. Under the Companies Act 2013, the CSR provision applied to companies meeting certain criteria. As I already told you, Section 30, all these criteria have been given under Section 135. I told you regarding the criteria that your net worth must be actually 500, your revenue or turnover actually should be 1,000 crore or more, and your profits must be actually 5 crores. So another important point is, in this particular case, CSR spending required 2%, as I told you. So 2% will be your answer, 2% of the average profit of the preceding 3 years. CSR is mandatory for the companies. In fact, all these three are going to be any one of the above. All these three criteria are laid down in Section 135, and if you are able to satisfy any of the criteria, you are supposed to actually then follow CSR. That means CSR becomes mandatory case for you then. MCQ 4, which committee must be formed under what we call CSR is applicable? As I told you, CSR committee, that is Corporate Social Responsibility Committee, wherein 3 directors must be there and 1 at least independent director. CSR activities should preferably be undertaken in the areas specified under Schedule 7, as I told you. Then spending on the following cannot be counted as CSR activities. See, contribution to Prime Minister Cares Fund is very much a part of what we call activity. Building schools and toilet is also a very much part of what we call CSR activity. Swachh Bharat activity is also a part, but however, activities outside India, correct, cannot be what we call treated as what we call CSR activity. So your answer will be C. The CSR committee must have at least how many directors? I have already told you, at least 3 directors must be there. Unspent CSR amount relating to ongoing project must be transferred to the unspent CSR account, as I told you earlier, 30 days. Is it clear to you? Then you have, in this case, which of the following is allowed as CSR expenditure? Among these, actually, which of the following is allowed as CSR expenditure? So, employee welfare expenses are not treated. Activities undertaken in the normal course of business are also not considered as CSR activity. And contribution to Section 8 companies engaged in CSR, of course, it will be treated as CSR activity. And even the political contributions are not treated as CSR activity, as I told you earlier. Failure to spend the CSR funds require company to actually disclose the reason in the board of directors. Sometimes it happens actually we are not able to actually spend the required amount. So in that case, we have to actually disclose the reason by way of notes or our report. Another topic, I have already told you actually there are 3 chapters which are quite vital: government accounting, CSR, XBRL. As far as other chapters are concerned, therefrom you can expect only the MCQs, not any sort of what we call deep studies required. 4P bottom lines. Actually earlier it was 3P bottom lines, now it is 4P bottom lines. What we mean by 4P bottom line? I told you in the beginning itself that now the accounting horizon is changing. Every passing day, actually, nowadays investors are becoming quite well aware, and they're to invest their money. The profitability of the company is not the sole criteria. Actually, they take into account many other aspects, as I just told you. Now, 4P, obviously, 4P, the first P deals with the profit, second P deals with the pupil. That means that should be the objective. Bottom line means the objectives. What should be the objectives of the company? Obviously, one, to earn the profit. Second, to do something for the pupil. And third, to do something for the planet. And the last one, which has been newly added, the fourth one, the 4th P actually, it is basically known as happiness of the stakeholders or spiritualism. Is it clear to you or not? So sometimes this question actually has been asked. Actually, 4th P relates to, your answer should be spiritualism or happiness of the stakeholders. Is it clear to you or not? I already told you when we say pupil, it means actually the entity should be concerned with the employee safety, welfare, labor practices, diversity and inclusion, community development and consumer production. Is it clear to you? Similarly, when we say planet, that means entity should be concerned with respect to environment issues like resource consumption, carbon footprint, waste generation, recycling, renewable energy, pollution control, etc. And similarly, profit, I've already told you, company obviously need to earn profit. And the 4th P, as I've already told you, is happiness or spiritualism, and in one word we may call it purpose. Is it clear to you? Of course, it means ethical governance, vision and mission alignment, stakeholders' purpose, long-term social contribution, innovation. So on very small topic actually this is. So which of the following is included in the 4P bottom line? I've already told you your answer will be B, people, planet, profit and purpose. Purpose here includes happiness. Is it clear to you? Second, the purpose of bottom line primarily focuses on short-term profitability? No. Environmental conservation? Only environmental consumption? That should not be the sole criteria. Ethical mission, values, long-term social contribution? Yes, we can say. So purpose actually deals with this. Is it clear to you? Third point, employee training and community welfare program falls under which? Of course, people here should be your answer. Monitoring carbon emission is related to which P? Profit, pupil, planet. Obviously, your answer should be, in this particular case, planet. And then, which of the following is the key advantage of the 4P bottom lines framework? Actually, it integrates the ethics and long-term mission into a performance evaluation. This is considered as the key advantage of the 4P bottom line framework. Next one is HR reporting. Coming over to the HR reporting here, meaning of human resource reporting. Human resource reporting refers to a systematic disclosure of information about what we call organization's workforce, what are human resource policy, what is employee performance, and the related qualitative and quantitative matrices. It enhances the transparency and helps stakeholders understand how effectively the organization is going to actually manage the human capital. Indirectly, human resource reporting simply means how the company is actually utilizing its workforce and what the company is doing for the workers. What are your criteria to evaluate the performance of the workers? This is what we mean by human resource reporting. And nowadays, actually, big entities like Infosys, like Bharat Heavy Electricals Limited, like Tata, like SAIL, Steel Authority of India, they are coming out with such reports. If ever you are going to scan their financial statement, you are going to find several reports which are attached to them. Now, key elements included in the HR reporting. The key element one is related to the quantitative information. Quantitative information means here you need to actually tell that what is the head count, how many permanent worker, contractual workers, part-time worker, what exactly your employee turnover rate, what are the training hours per employee this entity is actually delivering, employee productivity ratios, absenteeism rate, retirement and separation data and compensation structure. So that means here the numeric values are going to play an important role, whereas qualitative information means your policies and your practices, your employee engagement initiative, what initiative you are taking to engage the employees, occupational health and safety practices, diversity and inclusion initiatives, work culture, morale and employee satisfaction, and talent acquisition and retention strategy. That means company will have to deliver by way of human resource reporting what we call their data and information regarding these things. HR reporting as per global reporting initiative. Now, generally, like in normal accounts, we have International Accounting Standard Board, IASB as we call it. Similarly, for HR reporting, there is GRI, we call it Global Reporting Initiative. Global Reporting Initiative. So whenever an entity actually frames its human resource reporting, it takes into account the Global Reporting Initiative guidelines. And these guidelines are related to what we call employment, labor management relations, occupational health and safety, training and education, diversity and and non-discrimination, and additional disclosure like child labor, forced labor, etc. That means suppose you are going to prepare your human resource reporting, then you are going to follow what we call GRI, what we call guidelines. Human resource reporting in integrated reporting framework. What we mean by that? As we know, integrated reporting, under the integrated reporting, you will see later on that human capital is considered as one of the main capital. Is it clear to you? Because human capital includes competencies, capabilities, experience, motivation, and you can align it with the what we call values of the organization. Now, benefits of human resource reporting, of course, better manpower planning. If you are going to do human resource reporting, it will help you in better manpower planning. You can plan well. You can take, you can take improved decision makings. You can do what we call better decision making with respect to promotions, transfers, and their training. And obviously, it is going to increase the trust levels of the investors and the stakeholders, and it will help in what we call reducing the risks which are related to employees, and it will align the HR strategy with the organizational goals. Limitations of HR reporting. Now, because there is no prescribed standard, to be very honest with you, so that is the reason sometimes we find actually most of this reporting is done on voluntary basis. As I told you, in India, many companies are doing this reporting, but there is no mandation upon them to do so. So it is mostly on voluntary basis, and that is the reason there is hardly any uniformity. And it may be subjective. Sometimes it becomes very difficult to quantify the same. As I told you, there is no standardization as there is no standard. And sometimes there are confidentiality concerns are there because some private informations of the employees may be leaked out. And of course, sometimes it involves very high cost data to collect the what we call data and to maintain them. Now, popular matrices used in human resource reporting. If suppose you are going to prepare your human resource report, obviously you will take into account what we call some facts, some yardsticks to present the report. For example, when you are going to present the report, you will take into account the employee turnover ratio, their absenteeism rate, training expenditure, gender diversity ratio, employee engagement scores, average tenure, and health and safety incident. Is it clear to you or not? So now, human resource reporting MCQs. Human resource reporting primarily aims to. Now, in this particular answer, it's the primary aim is to provide information on organizational workforce and related policies. Is it clear to you? Similarly, which of the following is typically included in the human resource reporting? Now, employee turnover analysis, not primarily. The question is which typically included in the human resource reporting. Typically means primarily. Employee demographics and turnover. This is the prime factor, so this will be our answer. The Global Reporting Initiative standards related to human resource reporting fall mainly under which category? In this particular case, GRI 400, as we call it, Global Reporting Initiative, and 400, it deals with the social issues, correct? For example, labor practices, human rights, diversity, and employees' well-being. Which of the following is a quantitative human resource reporting indicators? I told you there are quantitative and qualitative issues which we need to present through the what we call HR reporting. Now, question here is asking quantitative indicator. Employee satisfaction description, no, it cannot be quantified. Company culture narrative, it cannot be quantified. Number of training hours per employee can be quantified. So we may say this is going to be the answer. A key limitation of human resource reporting is that actually many HR disclosures are voluntary, leading to inconsistency because there is no act, there is no force, there is no standard which force the companies to come out with what we call human resource reporting. It is generally done on a voluntary basis. Human resource reporting is most closely aligned with which broader reporting framework? I have already told you, actually it relates more to what we call integrated reporting. Which HR reporting metric is commonly used to evaluate the employee's stability? Which HR reporting metric, in this case employee turnover ratio, because employee turnover ratio will tell you actually how well the employees are satisfied and how much loyalty they have for the what we call concern. If the, as you know better than I, if the employee turnover ratio happens to be pretty low, then it is quite a satisfactory figure from the entity's perspective that when employees are feeling satisfied with the policy culture of the organization. Isn't it or not? And the next part is XBRL. XBRL. Now, XBRL actually, first of all, you need to be aware of this particular fact that it deals with what we call extensible business reporting language. Is it clear to you or not? Coming over to what we call the next part is applicability. As far as applicability is concerned, as far as applicability of XBRL is concerned, you should be quite well aware that in India, all the public companies which are listed in the stock exchange, that means all the listed companies in India and their Indian subsidiary company need to follow actually XBRL. It is mandatory. And all companies having a turnover of 100 crores or more, and all companies with a paid up capital of 5 crores or more, and all companies which are required to prepare their financial statement in accordance with the what we call Ind AS. So these are the criteria, which are the companies which are supposed to actually follow Ind AS. I've already told you all the listed companies having what we call a turnover of 100 crores or more, or what we call having a paid up capital of 5 crores or more, and similarly companies they are following Ind AS. However, you should also be aware that non-banking companies need to require to follow, similarly housing companies, and similarly companies which are engaged in the business of banking and insurance have been exempted from filing what we call XBRL. Is it clear to you? And I tell you the reason, because so far no taxonomies have been actually developed for the same, and that is the reason actually these companies have been exempted. And in future, don't worry about that, even the banking companies and insurance company will fall under the purview of or under the ambit of XBRL. Now, what exactly XBRL is? As you know, XBRL basically means Extensible Business Reporting Language, and it is in a common layman's language, we may call it that it is a computer language and used to prepare, exchange, and analyze the financial statement. Why XBRL is used? What is the purpose? Of course, to make the financial reporting faster, accurate, and automated. And through this particular system, actually, easy comparison can be done of the financial statement across the companies. This is another advantage. And it reduces manual error and duplication. And similarly, it makes the data searchable and reusable. You can search it easily. You can reuse it easily. Benefits: automated data collection and reporting, improves accuracy, quality of information, reduces the cost, and it is easy for the regulators like what we call MCS, SEBI, etc. And why? Who uses XBRL? I've already told you, companies, regulators, investors like investor analysts and auditors, and banks and financial institutions, they actually go for the use of XBRL. And as far as XBRL is concerned, actually in India it is implemented by Ministry of Corporate Affairs, and certain companies must file financial statement, as I've already told you, through the MCA portal. And in order to actually file what we call XBRL data formatted financial statement, we need to actually use the taxonomy. Taxonomy, in simple words, means the dictionary. Taxonomy used like Indian GAAP, Indian AS, and CNI costing standards. Similarly, process of XBRL. Actually, as far as a process is concerned, here we are supposed to prepare financial statement, convert them into what we call XBRL instance document. And in my regular classes, I have told actually what exactly is the behind the scenes story and how an entity actually converts their financial data into what we call XBRL. But at this moment, I will simply tell you this much. And then finally, it will have to be submitted. Now, there are some limitations. Initial setup is very high. It needs very trained people. And there are some errors. Actually, tagging may cause wrong reporting, because if you have tagged your financial data, then it will cause wrong reporting. Taxonomy changes require updates, because frequently there are what we call changes. However, just to give you an idea, brief idea here, for example, I have my financial data, and now I have to convert what we call into an XBRL system of financial statements. Then what I need to do, first of all, I will have to tag my data. How I am going to tag my data? Now let me give you a very simple example. For example, there is an entity, it can write the word daters for the amount due from the customer. Let us say there is another company, it can simply write amount due. It can simply write amount due. And there is another company who may simply write bills receivable. There is another company who may write what we call loans given. Is it clear to you? And amount receivable. But actually all these companies have to actually receive the amount. Now, when I am going to fill up this data, I will have to take into account the taxonomy. I will look into the taxonomy. What exactly is the word which is written over there for the amount receivable? Let us say over there is word only daters. So all these entities will have to now follow this taxonomy word. So they will have to tag it as you normally do in your social medias. Similarly, you will have to tag all these amounts with this particular word. So this way around, what happens, the financial data which the different companies are presenting will become a uniform data. And that is the reason we have to actually follow taxonomy. That is very important. Taxonomy in simple words is the dictionary, you can, as I told you earlier. And once you have put up your financial data and tagged it with the correct taxonomy, then ultimately it will get converted into an instance document. That means your financial statement will get converted into XBRL compatible data. Now, this is the point which you need to understand here. Now, coming over to the next part of this particular thing, then this data can be used, as I have already told you, by the analyst, by the investors, by the regulators, and you have the software tools to what we call keep on updating the same. This is the point which you need to understand under XBRL. So XBRL, I have already told you, actually stands for Extensible Business Reporting Language, and actual XBRL file submitted by the company is called instance document. This is another important MCQ. So many times it has been asked. Which of the following is not a type of link base? Actually, honestly speaking, this particular sort of question will not be asked, but capital link base. Actually, there are some link bases, but this MCQ is irrelevant from your examination point of view. The dictionary of tax is known as what we call taxonomy. This is very important. And which body has made XBRL filing mandatory in certain companies in India? I have already told you, it is the Ministry of Corporate Affairs. Is it clear to you? So these are quite vital points. And integrated reporting, now we move over to what we mean by integrated reporting. Integrated reporting, in simple one, name itself is telling integrated. That means you are combining something. That means you are combining your financial facts with the non-financial facts. So it is a concise communication explaining how an organization's strategy, governance, performance, and prospects lead to value creation in the short and medium and long term. And so often an MCQ has been asked that integrated reporting has been issued by, so you should know that IIRC. Is it clear to you? Integrated International Reporting Council, we call it. And as far as this particular council is concerned, it has given some what we call guiding principles. Suppose if you are going to prepare your integrated reports, you need to have some what we call points, and according to those, you need to actually focus upon and prepare your what we call report. A strategic focus and future orientation. That means when you are going to prepare your report, you should mention over there what exactly is your strategic focus and what exactly your future orientation programs are. Connectivity, information, stakeholders, relationship, materiality, conciseness, reliability, completeness, and consistency, and comparability. Similarly, what content it should have. Organizational overview, that means your integrated reporting must present an overview of your organization, governance, how you are governing, what exactly your business model is, and risk and opportunities which are associated, strategy and resource allocation, performance, outlook, basis of what we call preparation. However, the questions have been asked with respect to this. What are the 6 capitals which have been included under integrated reporting? One is financial, another one is manufactured capital, then human capital, intellectual, social, and relationship, and natural capital. As far as MCQs are concerned, IR primarily focus on, as we have already seen, actually value creation over time. over the time how we are going to create the value. That is basically the primary focus of integrated reporting. Integrated reporting is issued by, I've already told you, IIRC. How many capitals are there? There are 6 capitals. Connectivity of information is principle. We call it a principle of integrated reporting. Business model belongs to which IR element? We just went through that content element. Is it clear to you? The principle focusing on essential matters is materiality. Materiality is very important. And then outlook basically here represents the future expectations. And then finally, natural capital basically means ecosystem and resources. There is another topic, we call it QECM, that is quarterly earning call management. This is another innovation in the accounting field, whereby nowadays what companies are doing actually through call conferences, they are holding their annual meetings and they are talking about what we call their future outlooks. They are telling to the investor, their stakeholders. Anyway, so the point here is that it is a sort of meeting where management discusses the quarterly financial results with analysts and investors. So this is a best way to talk about and showcase and showcase what we call the performance of your organization with the help of the analyst, so that the trust element can be enhanced. And generally in this particular meeting we can see actually CEO, CFO. CEO means Chief Executive Officer, Chief Financial Officer, Investor Relations and Analyst. Generally they participate. And as far as structure of this particular meeting is concerned, of course, whenever such meetings will be held, first of all, the entity is going to introduce itself, and then it will talk about safe harbor statement. This is a phrase which we use. It means the future outlook. Safe harbor statement means the future outlook. And then management commentary will be there. That means with respect to financials and with respect to operations. And then outlook and guidance, question and answer session will be taken, and closing remarks will be done. Now, what it will help? Suppose if you are going to study the quarterly results in the newspaper, you are not going to get what we call as much as information as you are going to get the information by attending this session, isn't it or not? So this is the point. Actually, this helps. It enhances transparency, reduces the information asymmetry, and supports fair price discovery. Now, as far as questions are concerned, earning calls typically explains the quarterly financial performance. And this question has been asked so many times. Safe harbor statement basically means forward-looking statements. CFO usually presents the financial results. Question and answer section is basically for analysts and investors. If suppose you are interested in investing in this particular company, obviously you will have some queries, and you can raise those queries and your queries will be answered. So your answer will be analysts and investors. And the key purpose of earnings call, what exactly is the key purpose of this? Of course, transparency and communication. Financial metrics discussed in the earnings calls basically include revenue, earning before interest, tax, depreciation and amortization, and earning per share. Generally, these 3 aspects are going to be discussed. And now we come over to another small topic that is related to ESG, and generally some question will be asked, and general question is asked actually ESG stands for. So first of all, what exactly ESG? ESG means environment, E means environment, S means social, and G means governance. So it is a framework which evaluates companies' non-financial performance and long-term sustainability. So all these are non-financial performance, that what this entity is doing for environment, society, and how it is governing. So when we say that environment, it means actually we are covering the issues like carbon footprint, energy use, wastewater, pollution control. Similarly, social means labor practices, what exactly your labor practices, safety measures, diversity, human rights, community impact. And similarly, governance means board independence is there, ethics are there, transparency, anti-corruption, shareholders' right. So these are the things. And generally it is used by the investor for valuation and the risk assessment. It is integrated with what we call BRSR, and it is linked to capital availability and what we call reputation. So generally an MCQ could be asked, as I've already told you. So ESG primarily supports investor decision making. I've already told you, nowadays actually simply your profit earning capacity is not going to be the yardstick from the perspective of the investors. They are going to take into account what you are doing for environment, for society, and how you are governing your entity. Similarly, carbon emissions will fall under, now you tell me the answer, social, governance, environmental, economic. Obviously your answer will be environmental. And similarly, Board of Independence is basically a part of governance. Diversity and inclusion is a part of social. Waste management will come under environment. Transparency and ethical conduct related to governance principle. ESG differs from CSR because ESG, you can say, is a measurement based, although this particular MCQ will not be asked. ESG is integrated into which Indian framework, as we will see later on, BRSR. In fact, BRSR is going to be the next topic. Another small topic is there, BRSR. Is it clear to you or not? So business responsibility and social reporting here. Now, business responsibility and social reporting, actually, now it has been considered as mandatory for the top 1,000 listed companies. So all those companies which are in the upper rung of 1,000, they are supposed to actually prepare a report. They are also supposed to actually append BRSR report. Now, earlier it was business responsibility reporting, and BRSR has now substituted this one. And it is based on 9 NGRBC principle. NGRBC means National Guidelines on Responsible Business Conduct. Actually, the 9 principles are ethics, sustainability, employees, stakeholders, human rights, environment, and then policy influence, inclusive growth, and consumer value. And as far as BRSR is concerned, actually it has, your report should contain 3 aspects. One is general disclosure, then management and process disclosures, and principle-wise performance. Then another point here is BRSR core. Actually, it focuses on, the core idea is that you need to focus upon quantitative, verifiable, and assured ESG parameters. And secondly, here it is mandatory, limited assurance by auditors for the top listed company, as I've already told you. And it is designed to combat the greenwashing. What we mean by greenwashing? Greenwashing is a term actually which is used in the practical life by the entities to present itself. Entity is showing that we are very concerned with the environment, but actually it is not. I'm pretending I'm very concerned about the environment, but the fact is that I'm polluting the environment. This is known as greenwashing. So, basic idea, when we say core, basic idea of business responsibility and sustainability reporting is actually that it is designed to combat the greenwashing, so that company cannot simply what we call pretend that they are concerned with the social issues. They need to actually execute their what we call programs for the social issues. Is it clear to you? And BRSR light, there is another point, and it is voluntarily, that when even unlisted company can voluntarily actually prepare the BRSR, what we call reports, and they can append it, although there is no mandation upon them. So there are some benefits. Obviously, it improves ESG transparency, better investment decisions can be taken, builds reputation and long-term sustainability, and enhances compliance with the global ESG norms. BRSR replaced BRR. As I told you earlier, it was considered as business responsibility reporting. BRSR is mandatory for what we call top 1,000 companies. BRSR is based upon NGRBC principles. BRSR core basically focuses upon the quantifiable, assured metrics. A section of BRSR that includes the employee details, basically, it falls under general disclosure. Customer value and transparency is principle number 9 actually. And principle on environmental responsibility is actually P6. We call it principle 6. And leadership indicators in BRSR is optional. So this is the topic related to, this is the session related to all the theoretical aspect we have covered actually. I'm sure you are going to go through these notes. I'm going to upload the notes. And there was lots of demand with respect to what we call question paper of June 2025. So all these notes will be uploaded. You go to the Telegram and over there you will find the notes also. I will give you the link. So kindly actually give your comments also so that others get an idea actually that the things which we are providing you, they also should actually get benefit out of that. That's the point basically. So anyway, we have done our level best effort to see to it that not a single question has been left out. So hope that this particular session will stand you in a very good stead, and you will get what we call a bit of what we call benefit, if not very high benefit. I'm very sure you're going to get very high benefit, but let me know of that through what we call feedback. So on such count, actually, I'm going to end up this particular session, and I wish you all the best for your upcoming examination, and we will keep in touch with you, no doubt about it. Till the examination, I'm going to come out with, I'm sure, a mock test paper also, and I'm very sure that mock test paper is not going to be run of the mill. We always take lots of effort. You do not know actually how much efforts actually I have taken to prepare these notes, correct? And we are simply providing you free of cost of everything and as much as possible. So on that count, we take leave of you. It's a lovely good night from here.